Today we have 20 questions on group real estate investment. So before we get started, if you don't mind, go ahead and subscribe. It's free. Hit the notification button. If you like this content, give us a thumbs up and ask any questions in the comments. So here we go. What is the primary characteristic of a real estate investment trust? A, limited liability protection. B, pass-through taxation. C, active management by investors. D, unlimited liability. B, pass-through taxation. REITs typically enjoy pass-through taxation where income is not taxed at the entity level but is passed through to the investors. In a limited liability company structure for real estate investment, how is the liability of individual members typically treated? A, unlimited liability. B, limited liability. C, joint and several liability. D, corporate liability. B, limited liability. The members of an LLC enjoy limited liability, meaning their personal assets are generally protected from the company's debts and liabilities. What is the primary advantage of forming a limited partnership for real estate investment? A, limited liability for all partners. B, pass-through taxation. C, centralized management by general partners. D, avoidance of taxation. C, centralized management by general partners. Limited partnerships allow for centralized management by general partners who have unlimited liability, while limited partners enjoy limited liability. What type of group real estate investment form provides its investors with the benefits of both corporate stock ownership and partnership interest? A, real estate investment trust. B, limited liability company. C, limited partnership. D, real estate syndicate. A, real estate investment trust. REITs combine aspects of corporate stock ownership and partnership interest, providing investors with certain tax advantages. In a real estate syndicate, who typically takes on the role of active manager responsible for day-to-day operations? A, limited partners. B, passive investors. C, general partners. D, corporate officers. General partners in a syndicate are typically responsible for active management and day-to-day operations. Which group real estate investment form allows its investors to exchange shares with one another on the stock exchange, providing liquidity? A, real estate investment trust. B, limited liability company. C, limited partnership. D, real estate syndicate. A, real estate investment trust. REITs are traded on stock exchanges, providing investors with liquidity through the ability to buy and sell shares. What is a common feature of real estate syndicates in terms of profit distribution? A, equal distribution to all investors. B, priority return to general partners. C, pass-through taxation. D, fixed percentage distribution. B, priority return to general partners. In real estate syndicates, general partners often receive a priority return before profits are distributed to limited partners. What distinguishes a real estate investment trust from other investment vehicles regarding taxation? A, no taxation at any level. B, double taxation. C, pass-through taxation. D, variable taxation. C, pass-through taxation. REITs generally enjoy pass-through taxation, meaning income is not taxed at the entity level. In a limited liability company, how are profits and losses typically allocated among members? A, equally among all members. B, based on the percentage of ownership. C, solely to managing members. D, according to a fixed formula. Based on the percentage of ownership. In an LLC, profits and losses are typically allocated based on the percentage of ownership of each member. Once again, before we move on, please hit that subscribe button and give us a thumbs up. We'd appreciate it. Thank you. What is a common advantage of forming a limited partnership for real estate investment? A, pass-through taxation. B, limited liability for all partners. C, avoidance of taxation. D, unlimited liability for general partners. A, pass-through taxation. Limited partnerships often enjoy pass-through taxation where income is passed through to individual partners. What is a key feature of a real estate investment trust that distinguishes it from other investment forms? A, active management by investors. B, centralized management by trustees. C, unlimited liability for investors. D, sole ownership by individual investors. B, centralized management by trustees. REITs are managed by trustees or a board of directors providing centralized management. Which group real estate investment form allows its investors to participate in decision-making and has flexibility in profit distribution? A, real estate investment trust. B, limited liability company. C, limited partnership. D, real estate syndicate. B, limited liability company. LLCs provide flexibility in profit distribution and allow members to participate in decision making. In real estate syndicate, what role do limited partners typically play in decision making? A, active management. B, passive investors. C, day-to-day operations. D, decision makers. B, passive investors. Limited partners in a syndicate are usually passive investors who are not involved in day-to-day operations or decision-making. What is a common feature of real estate syndicates in terms of risk and liability for limited partners? A, unlimited liability. B, limited liability. C, joint and several liability. D, corporate liability. Limited liability. Limited partners in a real estate syndicate typically have limited liability protecting their personal assets. What is the characteristic of a real estate syndicate in terms of investor control? A, limited control for all investors. B, complete control for all investors. C, limited control for limited partners. D, complete control for general partners. C. Limited control for limited partners. Limited partners in a syndicate often have limited control over decision making. In a limited liability company, how are losses typically allocated among members? A. According to a fixed formula. B. Based on the percentage of ownership. C. Equally among all members. D. Solely to managing members. B. Based on the percentage of ownership. Losses in an LLC are typically allocated based on the percentage of ownership of each member. What is a potential disadvantage of real estate syndicates for limited partners? A. Unlimited liability. B. Limited control. C. Pass-through taxation. C. Centralized management. B. Limited control. Limited partners in a syndicate may have limited control over decision making. Which group of real estate investment firm provides investors with the ability to avoid double taxation while maintaining limited liability? A. Real estate investment trust. B. Limited liability company. C. Limited partnership. D. Real estate syndicate. B. Limited liability company. LLCs provide the benefits of limited liability and avoid double taxation. Well, I hope you enjoyed that. I hope you did well. Once again, please subscribe, hit the notification button. It's free to do that. That way you don't miss a video. Also, hit the thumbs up and check out our channel. We have thousands of questions on that channel. Thanks.